Good morning and good afternoon, everyone, and welcome to the May 2022 DTN WASDE webinar. My name is Andy Miller with DTN. I'll be your moderator today. And with me, as always, is Todd Hultman, Lead Market Analyst for DTN. During this event, all participants will be in a listen-only mode, and you may ask questions at any time during the event. To do this, simply click on the Q&A section on the bottom right and type in your question, and we'll save that towards the end when Todd will address it during a Q&A panel. So please ask questions at any time during the presentation. Those will not be viewed by any other attendees, and again, we'll review them at the end. One other point I'll make is that this event is being recorded, and it will be rebroadcast on our DTN website within the next 48 hours in the webinar section. So I think that covers all the basics. Todd, I'm going to turn it over to you.
Thank you, Andy. Thank you, everybody. This is quite a ritual we go through every year with the new May WASDE report. Not only is it a lot of updates on the old crop season already in effect, but we have brand new new crop estimates for the season ahead. And of course, we've got corn and soybeans in the field just getting planted this week as we finally get in some warmer temperatures. So the thing I always like to stress, especially on these early new crop estimates for the season, is that there is still an extremely high level of uncertainty in all these new crop estimates. And I want to just kind of show that out here. This particular scatter chart is a record of USDA's ending corn stocks to use ratios over the past 25 years. And the question I'm asking here is how well do they correlate to the final average farm price that the season ends up with? And the answer is they don't correlate very well at all. And actually that's not beating up on USDA. It's just to highlight how much we don't know at this point in the season. And that's certainly going to be true again this year. Statistically, there's a correlation of 17%. That's the R-squared value, which suggests that there is almost no significance actually to today's new crop estimates. So I just want to point that out again as a kind of a warning label on this pack of cigarettes that we have in front of us, and to realize that there's a lot of unanswered questions ahead. And of course, with the situation in Ukraine this year, that's more true than ever. So setting that tone, let's go ahead and take a look into what USDA said, and we'll start with the estimates for corn. Now, in the far right column are the new crop estimates for the new season, 2022 to 23. And in the second from the left column, we have the new estimates for the current season, which is 20. Yes.
Todd, my apologies. The slides are not forwarding. So I'm going to see if there's something wrong.
Okay. Now it says I'm the presenter, so maybe you just gave me the ball.
Yep, that might be my fault. Apologies to everyone. Sorry, Todd.
Okay, that's all right. And are we on the USDA table now for corn as far as you can tell, Andy?
We are.
Okay, very good. All right, thanks for helping us out there. Okay, so let's start in the old crop season, second column from the left. And we see in the rectangle at the very bottom, ending stocks for corn in the current season remained unchanged in this report, 1.44 billion bushels with an average farm price of $5.90. Of course, corn is trading much higher than that now, but that is the old crop estimate from USDA. And so there were no major changes in the category, and I just want to emphasize that corn export estimate stayed unchanged at 2.5 billion bushels. Now, moving to the new crop season, the far right column, we're going to start at the top and work our way down. We see the planting area, 89.5 million acres. You'll remember that came from the March planting intention survey, and that was expected today. That's a 5-year low if it holds true. I still like to remind people that we don't have a good estimate of planted acres really until the June 30th acreage report. So Some years that March survey is close, but in several of the past few years it has not been so close, and things can happen. The yield per harvested acre came in less than expected today. Usually USDA will use the February outlook yield, which is kind of a trend line figure that they use. Today they dropped that to 177 bushels per acre. I didn't have time to read any reasoning on that or why they're not using the 181, but they chose to go with 177, which is the same yield as a year ago. With that, we have a crop estimate for the new 2023 or 2022 year of 14.46 billion bushels, and that is down 655 million bushels from a year ago. So they're looking for a smaller planting and the same yield. That's how the estimate starts here in May, 14.46 billion bushels. Moving down, a couple other red arrows to note. Feed demand came in less than the current season, 5.35 billion bushels, and I suppose that's related to the higher corn price that we're going to be dealing with in the new season. And the export estimate came in 100 million bushels less than the current season at 2.4 billion bushels. Put it all together and we look at the red rectangle at the bottom, the new ending stocks estimate for the new season, 1.36 billion bushels. That works out roughly to 9% ending stocks to use. The new average farm price for corn, $6.75 a bushel, is USDA's best guess at the moment. Now we'll take a look at, we're going to look at two world balance sheets today because we've got activity going on in two seasons. In South America, we're still growing and harvesting corn crops in Brazil and Argentina, and that is the current season, 2021 to 22. And then, of course, after this, we're going to look at the new crop world estimates, which are going to give us some early estimates, not only for the U.S., but also Ukraine. Now, in the upper right corner where you see the red arrow, the ending stocks estimate there increased. Last month it was 305.5 million metric tons. Now we're looking at 309.4 million metric tons. And this may be the mystery of the report. And I'm sorry, I tried to scramble and find the rationale for this, but it's going to take deeper digging than what I was able to come up with in the time I had to prepare. I don't know exactly yet what USDA's explanation is. I can tell you that the world production estimate for corn in this current season increased by roughly 5 million metric tons, or more specific, 5.2 million metric tons specifically. That's where you see the 3 question marks above the world production estimate of 1,215 million metric tons. Where that 5 million metric ton production estimate came from, I don't know. If you look at Argentina and Brazil's crop estimates, they remained the same for the season at 53 and 116. The U.S. obviously did not change. There were slight increases in small categories. For instance, Egypt increased slightly, but the short answer is I don't know exactly where this 5 million metric ton increase is coming from. So it's going to have to remain a mystery at the moment. I hope to have that sleuthed out later. The other thing I want to note before we move on, we always have a question about Canada's corn imports from the U.S. this year, and we see in the lower rectangle for both Canada and China that the import estimates were unchanged in this report, 3.8 million metric tons of corn going to Canada, 23 million metric tons of corn going to China. Both of those figures unchanged on the month. Okay, now let's move to the world estimate for the new crop season. And of course, the 5 million metric ton increase that we saw in the old crop season is also going to translate to ending stocks in this season. So in the upper right corner, we see a new ending stocks estimate of just over 305 million metric tons. That was quite a bit above expectations. The market was looking for something closer to 296 million metric tons. So again, this is the bearish surprise, and I don't have a good explanation yet, unfortunately, but that is obviously going to be the subject of debate and some further research here in the hours ahead. Brazil and Argentina, keep in mind the crop estimates for Brazil and Argentina are still many, many months away. Brazil corn is not going to start planting, or either one, until our fall. So they're still a long way from having this crop even planted. So it's very tough to take those estimates seriously. But obviously they're looking at healthier numbers for Brazil and Argentina. I say healthier compared to the drought limited numbers that both of those countries were showing this year. And then in China, an early estimate of corn imports from China is 18 million metric tons. That's down from the current season's 23. Or in English, the current season has roughly 900 million bushels of corn imports expected for China, and roughly 700 million bushels in the new season. Again, these new crop estimates, especially on the world totals, have a high degree of uncertainty, and there's a long season yet in front of us to learn a lot more than we know now. Okay, for Ukraine, I wanted to mention what things look like for Ukraine this year. I should have pulled back here. I meant to highlight, sorry, I did not get the red rectangle around it. But if we look in the second to the farthest right column for Ukraine, we see an estimate of 9 million metric tons of corn being exported. Now, that 9 million metric tons works out to 354 million bushels, so to speak. Now, I wanted to compare USDA's estimate for this new season to the export expectations in January earlier this year before Ukraine was attacked by Russia, just to show you the contrast and what the war is doing here. So in January, USDA was expecting Ukraine to export 1.32 billion bushels of corn before they were invaded. Now for the new season, the initial estimate that USDA has for Ukraine is 354 million bushels. Obviously, there's again a big range of uncertainty around that estimate, but I think it's quite reasonable to expect a much lower number, obviously, than before the invasion. So we could see this number cut in half still in the season ahead, but again, it's going to depend a lot on Putin and the success or lack of success he's having in having his way in the country. And he certainly made efforts not only to intensify fighting in the eastern part of the country, but he's made efforts to really disrupt the ability of Ukraine to export goods from the western side of the country. And so I expect that to continue, and this will probably be a very difficult situation for a long time in the months ahead. Similarly, while we're on the same topic, at the peak in January before the invasion, Ukraine was expected to export 889 million bushels in the old crop season. In the new crop season, USDA is anticipating exports of 367 million bushels. Now, whether or not they're able to pull that off, time will tell, but I think it's a fair, reasonable estimate to start with very low totals as USDA has here. Okay, this is the chart that we use to determine if outside markets were quiet and conditions were relatively normal, what kind of price range would we expect for cash corn prices given the new crop ending stocks estimate of 1.36 billion bushels. And as I mentioned, that new crop estimate is roughly 9% of annual use. So we take a look at the blue dots above the red arrow, close to 9%. And we see quite a range there. It's roughly, $3.60 to $7 is where cash corn prices have traded in the past when we've had a similar supply situation that we do now. But the statistical center that runs through the center of all those dots works out to roughly $5.30. Well, cash corn is trading at $7.78 here, or $7.79 as of last night's close. So obviously there's a lot more bullishness in the market than can just be explained from the supply situation that USDA currently estimates. I just put that out there as kind of a fundamental anchor to help us realize how much fear premium and how much weather premium is in this market. How are corn exports doing? Actually, the export shipments are staying quite active. We just got our most recent report this morning. Shipments for the season total 1.63 billion bushels, down just 8% from last year's record pace. I think it was reasonable that USDA kept its corn export estimate at 2.5 billion bushels today. We're within just 200 million bushels of that with 4 months left in the year. So that does seem attainable. And keep in mind that we don't have much competition this year from either South America or Ukraine when it comes to corn exports. So the U.S. producer ought to be situated pretty well there when it comes to exports. How about prices in China? This is the most active corn future in China, and as you can see, prices still remain quite strong. This morning's close translated to $11.13 a bushel. We had a new announcement of another corn sale to China this morning. The weekly report was not so encouraging. We actually had a marketing year low of old crop corn sales in the most recent week. But so far, China has purchased 579 million bushels of corn and has remained an active buyer through this time. The corn basis. Here's our map of corn bids across the Midwest. And I realize it can be kind of a difficult looking mess maybe, but as you see here, we have most cash corn bids kind of in the upper $7 range, spread fairly evenly throughout much of the Midwest. There have been prices above $8, but last night's average, our DTN corn index, came out to $7.79 as a national average. That's up 45 cents from where it was when we were talking a month ago. The cash basis, which is our interest here, is just 10 cents below the July contract. That's the strongest cash basis for this time of year that we've seen in 10 years. So continues to be a very solid picture of corn demand here in the U.S. And of course, that's been propelled by favorable, profitable margins for ethanol and also good export demand. The corn spread. Now we're going to take a look at new crop corn spreads. Here's the December-March spread. As you can see, there was a bit of a panic, to say the least, in early March, shortly after Russia invaded Ukraine. It's not surprising that the market panicked. That's not the kind of news that you hear all the time. And of course, Ukraine is one of the world's top 4 producers and exporters of corn generally. So it did really shake up the markets in a quite threatening way in early March, but a lot of that has calmed down, as you can kind of see from the spread price here. And the way things look right now, we have kind of a neutral to bearish situation for new crop corn demand. We have the December corn price roughly 3.5 cents below the March. This is as of yesterday's close. So it's kind of, as I say, neutral to slightly bearish, which is not untypical for this time of year. Speculative positions in corn. The red bars on this chart represent the net long positions in corn. As you can see, speculators have been net long ever since late 2020, and they've basically held those positions with some ups and downs in between. But today we still have net longs in corn from the speculative side of the market near their highest levels in a year. It's over 500,000 contracts. It's a lot of contracts, and it's not been threatened yet because the corn price has remained near its highest levels in 9 years. The concern, of course, is if something changes during the season and the outlook changes and corn prices start breaking new lows, then this speculative position will be a concern. But for right now, they're just riding, obviously, a very favorable trend in their direction. Okay, let's take a look at the soybean market. What did USDA have to say for old crop and new crop soybeans today? Again, we'll start in the second column from the left. We'll start with the old crop season, and we see that the old crop ending stocks fell from 260 million bushels down to 235 million bushels. That's not quite as big a drop as was expected, but it's still going to be the lowest in 6 years, and it's below last year's total, or the previous season's total of 257 million bushels. As we looked through the numbers, let me see if I can find my note here. The one change that we did see was in exports, and that's not surprising. We have a new export estimate in the old crop season, 2.14 billion bushels. That's up from last month's 2.115. We've been noting in our market comments lately that sales and shipments of soybeans have exceeded the export estimate, that 2.115 export estimate, for a couple weeks now. So this was not unexpected to see a slightly higher export estimate there. Now let's move our attention to the new crop season in the far right column. Starting at the top, 91 million planted acres is familiar to you. That's what we heard in the March planting survey. If true, that's a record soybean planting that we're going to have this year. The yield of 51.5 bushels per acre held up from the February outlook estimate, so no surprise there. The new crop total USDA is starting with is 4.64 billion bushels. If true, that will be a record soybean crop this year and up 205 million bushels from last year's soybean crop. There were two slight demand adjustments in the new crop season totals. USDA is looking for a 40 million bushel increase in the crush demand up to 2.255 billion bushels, and they're looking for slightly more exports up to 2.2 billion bushels. Put all that together and we have a new season ending stocks estimate of 310 million bushels. If that holds up, that would be 75 million bushels more than the current season we're in, but also commands a higher average farm price, as you see, of $14.40. The new ending stocks estimate is just about 7% of annual use, so it's still a relatively tight situation. And again, lots of uncertainty and lots to learn about the new year ahead yet. Here's the world supply and demand table for old crop soybeans. I just wanted to point out a couple changes here. The upper right corner shows 85.2 million metric tons of soybean stocks expected. Let me find my note. That was less than expected. The trade was looking for 89 million metric tons. We did have a reduction in Argentina's crop estimate. Instead of 43.5 million metric tons, USDA is now estimating Argentina's production at 42. For Brazil, the estimate stayed the same at 125 million metric tons. And for Paraguay, there was a slight reduction. I believe it was 5.4 a month ago. Now it's showing 4.2 million metric tons. So slight reductions in the crop estimates for Argentina and Paraguay. Again, not a surprise. We've been talking about dry conditions in Argentina for quite a while now, and they're over 55% harvested, that being updated just later this afternoon. The other highlight to note, the little square, is China's estimate of soybean imports, and that was increased from 91 to 92 million metric tons in this report. So it's interesting that in spite of all the headlines about COVID and cities being locked down in China and a slower economic performance coming out of the country, their appetite for soybeans has remained very active, very strong, and USDA acknowledges that this month with a 1 million metric ton increase in China's import estimate. Now, looking at the new crop estimates, again, keep in mind the South American totals don't really have a lot of meaning here. We're so far away from even having South American crops planted for the new season. That doesn't mean a lot. But if we look at the upper right corner, we see 99.6 million metric tons of ending stocks estimated in that new season, but it's almost not worth talking about. It's so far off. I will mention that, let me check one. Yes, okay. One thing I do want to mention that in the current season, we do have local ending stocks estimates for Brazil and Argentina. Keep in mind, in the WASDE report, these are mid-season estimates that they show for South America, but we can't go to another report USDA has and see what their estimate is of actual ending local stocks in the countries. For Brazil in the current season, which ends at the end of January, USDA is expecting only 72 million bushels of ending stocks. For Argentina, I'm going to tell you a different number than what you see on the screen. Argentina, the new ending stocks estimate is actually 131 million bushels, and that's for the current season, which ends at the end of March in 2023 for Brazil. So both of those countries are in the midst of their seasons, which don't end for several months yet, but USDA estimating extremely tight soybean supplies in both of those major world producers of soybeans. Sorry for any confusion there of having a bad number up and really having it on the wrong table. Okay, cash soybean prices. Fundamentally speaking, historically speaking, what should they be? And this is based, we're going to base this off of the new crop estimate of 310 million bushels, which, as I mentioned, is almost 7% of annual use. The historical target for that soybean price, cash soybean price, is roughly $12 a bushel. Again, soybeans are trading quite a bit above that already, $15.72. We've seen much better demand this year, especially after drought hit Brazil, and we still have a situation of extremely tight world vegetable oil supplies with a lot of bullish implications for soybean oil and soybean prices as well. So there's a lot of outside bullishness really helping pump that price much higher than you would typically see in this particular supply situation. How are soybean export sales doing? Or I should say the shipments actually are doing fairly well. They're above the 4-year average. We're down 16% from a year ago. But remember, last year was a record pace for soybeans. So soybean shipments, 1.755 billion bushels as of May 5th. I don't think they're going to have a problem reaching their goal ultimately. We have sales commitments out ahead of the shipment pace right now. As I mentioned, sales commitments 2.148 billion bushels as of this morning's report. That was 33 million bushels above USDA's full crop export estimate, but of course they raised that to 2.14 billion bushels in this report. So those sales commitments are still ahead of USDA's export estimate. Don't be surprised if we don't get another bump up in that export estimate before we get to the end of August. China, as we look at prices on the Dalian exchange, both for soybeans, which is the upper chart, and for soybean meal, we see two markets that are still in uptrends, broke new highs earlier this year and have been kind of chopping but holding support in spite of all the COVID concerns that we hear about in the headlines. July soybeans as of this morning trading at the equivalent of $20.55 a bushel. And up until this week's report, China had been a very active buyer of U.S. soybeans. So far, China has bought 1.1 billion bushels of U.S. soybeans to date, and we still have almost 4 months left in the season. U.S. soybean prices, here's our cash bid map showing the prices across the country. Most of them are in the mid to upper 15 range. You see some, the prices in around Illinois, around the Mississippi River are more in the $16 range. This is a little more traditional type of east-west basis differential that we're used to seeing. The national average, our DTN soybean index, came in at $15.72 last night. That's down 12 cents from where we were a month ago when we looked at this map. The cash basis is 35 cents below July at the moment. That's still the second strongest in 8 years. So this is still a very strong demand situation. And of course, we've been talking since harvest about how strong the crush incentives are. We'll talk about that in just a moment. And so when you got strong crush demand and active imports, as we've had since South America's been hurt by dry weather, we have still a very strong demand situation for our soybeans here in the U.S. The future spread is one indication of that we look at to assess what the demand situation might be. And here again, we're shifting our attention to the new crop months now, so we're looking at the November-January spread. Again, it shows that big run-up shortly after the Russian invasion, all the bullish excitement that was in the market. Well, that spread has quickly calmed down the past 2 months now, and we're now sitting with the November contract roughly 2.5 cents below the January. So that's really, it's probably a neutral indication of demand. I've labeled here as neutral to slightly bearish, but again, typical for this time of year. The soybean crush. This is one chart that continues to have bullish implications for soybean prices and still does. And the surprising thing about this is that since we talked last, soybean meal prices have broken down fairly dramatically. They're down roughly $68 the past 3 weeks. They've broken to they're now at their lowest price levels in over 3 months. And it's been a harsh enough break to inspire non-commercial selling. But in spite of that drop in meal, and it looks like drop in demand for soybean meal, soybean oil prices have held firm, and the combined crush value of meal and oil has stayed quite strong. Even as of last night, we're still $3.10 above the cost of the soybean. So it still pays quite generously to crush that soybean here in the U.S. USDA comes out with a weekly report based on Illinois prices every Friday, and that continues to look very bullish, very strong. And again, even in the face of lower soybean meal prices lately, the crush values are still holding up very well. So this continues to be a very strong sign of bullish domestic demand for our soybeans. Speculative positions in soybeans, again, the speculative positions are signified by the red bars at the bottom of the chart. We saw kind of a sell-off in their positions in late 2021, but as prices rallied back and are back near their 9-year highs once again, that a lot of that speculative interest has been restored. There's over 190,000 contracts net long in the latest report, which is updated each Friday. So somewhat like corn, we see speculators in the market heavily involved on the long side and have been rewarded by soybean prices that have largely trended higher. Again, the concern is if prices were to break support, that's when these speculative positions come under fire and add selling pressure to the market. So that's something to keep in mind. Okay, it's been a lot of numbers so far. Hope you're hanging in there. We just have one more crop to go here. Let's take a look at USDA's wheat estimates. And again, we'll start in the old crop column, the second from the left. And looking at the rectangle, we see that ending stocks for old crop wheat were reduced from 678 million bushels now down to 655 million bushels. Basically, the only change there was in the export estimate, and the surprise of the day, one of the surprises of the day, was that USDA actually increased the export estimate 20 million bushels. It's now 805 million bushels. And I have to laugh because if you look at the weekly export sales reports, we haven't seen much export business lately. We had another new marketing year low in this morning's weekly report. There's only 714 million bushels of total sales on record right now, and we have less than a month left in the season. But the one thing I sometimes forget to point out is that when we look at Census Bureau totals, the Census Bureau data shows about an extra 90 million bushels of soybeans that have been shipped that did not show up in the weekly export sales totals. So the actual pace of wheat sales are a little bit better than advertised, but even so, it's still a surprise to see USDA increase that export estimate today by 20 million bushels. Now, moving to the new crop season, we'll start at the top. Planted acres 47.4 million for wheat. That held true to the February outlook estimate. The yield of 46.6 bushels an acre is a little bit below. I believe in February USDA said 47.4, so it's almost a bushel an acre below on the yield total. So USDA is starting to acknowledge some problem in wheat country. The production estimate of the day, 1.729 billion bushels, came in less than expected. The trade was expecting a number closer to 1.8 billion bushels. So that came a little less than expected. And we'll have a breakdown in just a moment of the winter wheat totals that make that up. But this is the early estimate for the new crop season. And as we put all the new numbers together, USDA's new ending stocks estimate for wheat, U.S. wheat in the new crop season is 619 million bushels, commanding an average farm price of $10.75 a bushel. So that's quite an improvement on top of the current season as far as the average farm price that you see there. Let's go ahead now and take a look at the breakdown of those wheat productions, and this comes from NASA's crop production report. And in today's report, we see winter wheat estimate 1.17 billion bushels. That came in less than expected. The HRW, the hard red winter variety, is where the bullish surprise of the day was, 590 million bushels compared to an expectation of 683 from Dow Jones pre-report survey. So that came in much less than expected, and as you can see, it's down from 749 million bushels a year ago. Now, it's no secret, there's serious drought in the southwestern plains, especially in western Kansas and the Texas Panhandle and all throughout that area. Next week, we're going to be kicking off reports from the Wheat Quality Council's Hard Red Winter Wheat Tour. We'll have reporters on hand to give us day-by-day reports and give us a first-hand look at how things look basically around Kansas, southern Nebraska, and parts of Oklahoma. The SRW wheat crop came in at roughly 354 million bushels. That was a little bit less than expected and down slightly from a year ago. And the white wheat total came in actually better than expected. That Pacific Northwest region's been getting some better rains, certainly in a better situation than they had last year. So USDA is looking for 230 million bushels of white wheat this year, and that's up significantly from last year's total of 167 million bushels. Old crop wheat supplies. This is just the breakdown of the different categories, and the ending stocks estimates were slightly reduced for hard red winter wheat, hard red spring wheat, and soft red winter wheat. So a little bit of bullishness spread among all three of those categories. I'll just move on here. Here is the new crop estimates for the 2022-23 season. And as you see in the upper right-hand corner, we have a new world ending wheat stocks estimate of 267 million metric tons. Now, that is quite a bit less than was expected. The trade was looking for something closer to 272 million metric tons. This, if it bears out to be true, this will be the lowest tally of world wheat stocks in 6 years. And I just kind of circled there four big country crop estimates worth mentioning. In Canada, and keep in mind this is the new crop season, USDA is looking for 33 million metric tons of production. That's up roughly 11 million metric tons from last year's drought-stricken crop. In the European Union, they're looking for 136.5 million metric tons. I believe that's roughly 2 million metric tons less than last year's crop. In Russia, they're looking for 80 million metric tons of production. That's up almost 5 million metric tons from last year's level. And I will say that private estimates that we see from time to time have put Russia's crop even higher, closer to 87 million metric tons. One of those being Andrei Sizov from SovEcon on Twitter. So shout out to Andrei there. He has an 87 million metric ton, or at least last I saw, crop estimate for Russia. And then, of course, we're concerned about Ukraine. Ukraine's production estimated this year at 21.5 million metric tons. That's down 11.5 from last year's production. But I think even more important than the production estimates for Ukraine this year are going to be the export estimates. How much of that crop that they're able to grow is able to make it out of the country. And in that regard, USDA is estimating 10 million metric tons of wheat will be exported from Ukraine in the upcoming new crop season. And if true, that would be about 367 million bushels. We mentioned that earlier on the little chart we had. So again, lots of uncertainty in the situation with Ukraine, and we'll just have to see how that plays out this year. But once again, these ending world stocks estimates, 267 million metric tons, less than the trade was looking for, and starts the year off expecting the lowest world ending stocks in 6 years. Now, the other way that I like to look at world wheat supplies is to look at the ending stocks totals among the top 8 exporters. And in that regard, we see an even more bullish situation. USDA's estimate of those ending stocks is 1.78 billion bushels now. If true, that would be the lowest exportable supply in 15 years. So obviously a very bullish situation worldwide as far as wheat supplies go, and the whole situation in Ukraine just showing how important that is. Before we leave, I wanted to make mention of the crop estimate for India. There's been a lot of talk about the heat wave in India lately. That crop estimate came in at 108.5 million metric tons. The Indian government themselves have estimated their crop at 105 million metric tons, so there could still be possible room for that to go down. But USDA's early estimate coming in at 108.5 for India. And of course, if you know, India has been talked about as a possible source of replacement wheat supplies for Ukraine, but that's a little tougher now given the heat wave that they're talking about. And by the way, USDA estimates 8.5 million metric tons of wheat to be exported from India in the new crop season. So that's not as much as they were hoping for when they were hoping India could make up for some of Ukraine's lost wheat. Okay, cash HRW wheat supplies. If we just look at things historically, what does USDA's supply estimate situation mean for HRW wheat supplies? That's the largest wheat variety that we grow here in the U.S. And the new crop estimate there of 33% for all wheat translates to a price of roughly $5.80 of expectation for cash HRW wheat. Well, the current cash price on our DTN National HRW Wheat Index is $11.47 a bushel, so it's almost twice the amount, as you see from a strictly supply and demand historical analysis. So obviously there's a lot of things in the outside markets for wheat and a lot of things in the anticipation of drought here in the U.S., the heat wave in India, and we also have concerns about dry weather and hot temperatures in Europe. So all these factors are adding to the bullishness that we see in wheat this year, as well as the uncertainty of events in Ukraine and not knowing what Russia is going to do next. That also adds a lot of fear to the markets. That gets reflected in the prices we see. Okay, as far as the basis situation in HRW wheat, there's nothing encouraging here. The cash basis is roughly 52 cents below the July contract. As I mentioned, our DTN index was at 1147 last night. That's up $1.31 from where it was a month ago. So those cash prices are still quite strong, but the cash basis is actually the weakest it's been in 5 years. So we have had problems with generating much demand for wheat here in the U.S. Even though world supplies are down, we're still kind of at the bottom of the totem pole when it comes to export opportunities. The speculative positions in wheat are actually quite reasonable given how bullish this market looks at the moment. As you can see, the July KC wheat chart trading near its highest levels in 14 years. Speculators have somewhat trimmed their net long positions lately. They're still just under 38,000 at the current time. I would say the speculative part of the market is not really a major threat to the Kansas City wheat price at the current time. Drought and the uncertainty of Ukraine are much bigger threats, and I would say legitimate threats at this time. Okay, that was a lot. If you're still hanging in there, congratulations. In conclusion, I just want to say today's report for corn, I have to call it bearish because of the big jump in world ending stocks, but I won't rest easy until I understand more about where that 5 million metric ton increase came from. It possibly came from production totals from countries that are minor players in world wheat production, and that's a possibility. But none of the obvious players, Brazil, Argentina, the U.S., they were not involved in higher crop estimates. So it'll be interesting to track down where that increase came from. As far as soybeans, I couldn't decide. It was slightly neutral, slightly bullish. I mean, we do have old crop ending stocks at a 6-year low. We did see another reduction in Argentina's crop estimate. And so for those reasons, we also have very tight supply situations in both Brazil and Argentina when you consider their local marketing seasons. So even though today's numbers came in close to expectations for soybeans, I think we still have a very bullish situation at hand here. And then lastly, for wheat, I would say today's numbers were fairly consistently bullish for wheat. The U.S. ending wheat stocks were lower than expected, both in the old crop and the new crop seasons. And most importantly, that exportable supply of world wheat being at a 15-year low is something to take quite seriously as we move through the year ahead and just learn what's going to happen to Ukraine and Russia and that whole situation. So that continues to be a very bullish situation. Before I let you go or move on to questions, I just want to put a little plug in for our DTN podcast. We have DTN field posts. If you've never checked it out, I encourage you to go to our free website page. That's dtnpf.com. You'll find a link for videos and field post podcasts. The latest podcast is about the topic of soybean oil and renewable diesel, an interview with our staff reporter, Matt Wildy, who did a very good, interesting series lately about soybeans, entitled Soybeans Are Crushing It, literally. So if you get a chance, check out our podcast. And with that, I'll turn it back to Andy and see if we have any questions.
We do. So the first one is pretty specific. Does China's corn purchases from the U.S. at 579 million bushels include today's purchase?
Let's see. I'm going to have to check one thing here. You know, I don't think it does. Now, keep in mind, today's purchase was 24 million bushels, but only 2.7 million bushels of that was in the old crop season. So for the old crop ramification, today's purchase was not a big addition. I hate to take too much time here, but if I can find the answer quickly. Oh, crap. Convert. Here we go. So we had 558 million bushels on the books before today, and then it was 2.7 of old crop sales added today.
Got it.
And
one
is
more.
558 the number? Is 558 the number I had on the slide, or does it mention in the question again, Andy? So, sorry if there's confusion there.
And I apologize because I'm just reading the question at 579 million bushels included in today's purchase. So that might not be reflection. Just reading what was put in there.
Yeah. So okay. So I made a mistake. Is what I think I'm finding here. So 558 million bushels is the total before today's 2.7 was added to it.
Gotcha.
Sorry, folks.
No, you've got a lot coming at you. And speaking of a lot coming at you to analyze, I think we all marvel sometimes at all the different variables you're managing as you look through this. This one's on the other end of the spectrum. Joe Biden made some announcements yesterday, all related to the USDA. He called it his three-pronged plan. Wanted to get your perspective, and for those who, I'm assuming most everyone on this call probably at least heard of this, but the three prongs were double cropping, with USDA expanding double cropping insurance, kind of a focus on precision agriculture, which seemed to be more just doubling down on that being kind of a focus area in general. And then increasing some investment on domestic fertilizer from 250 million to 500 million. So how do you think that may impact us as we go forward, or those may impact as we go forward?
Okay, sure. Just real lightly, it's a little late to talk about making an effort to encourage more double cropping. I mean, for the most part, those plans are already in place. And my initial thought as an analyst is, you know, if you had the ability to double crop this year, I can't imagine having more incentive in any other year than you've had this year. So I doubt that the government actually is going to be able to encourage much more than what's already being encouraged in terms of double cropping. On the fertilizer situation, I'm absolutely for anything the government can do to help get our shipping logistics problems out of the way, and if that also includes trying to find ways of increasing domestic fertilizer production, I think we have to rethink that. There's some things are just too important, and it feels like we've exported away a lot of very important and vital industries that are crucial to our food security, and we need to rethink that. So I am in favor of doing things to encourage more domestic protection of those parts of our supply chain that are just crucial to our survival.
Good deal. Well, that wraps us up. I'll go ahead and close the session for today and just say thanks to everyone for joining. Thank you, Todd, for you're as your usual taking a lot of information and trying to boil it down to consumable, insightful information. I know that is no small task, so thank you again. Just a reminder, we did record this session and it will be rebroadcast on DTN.com within the next 48 hours. But Todd, as always, has graciously put his contact information up on the screen, so capture that if you'd like, and certainly reach out to him with more questions. So with that, I'll say thanks again and hope everyone has a wonderful day.
Thank you, everybody.